For more on U.S. trade policies, my colleague Rachelle Akuffo spoke with CGTN's global economic analyst, Saruhan Hatipoglu. He's also the CEO of Business Environment Risk Intelligence. Rachelle began by asking him about the impact of the U.S.-China trade war on businesses.
They are uncertain, and that's a very bad word because businesses do take risks. They know how to hedge against risks. What they hate is uncertainty, and that's what I'm seeing from my clients, from their clients, as well as other CEOs, CFOs that I talk to from time to time. How can this be addressed? Well, it's very important to come out and be on the same page. G20 did not produce that. So we have already felt the impact of these tariffs on the business side of it because a lot of them were on tech products, very little on consumer products. If they didn't decide to take a brief break in January, we would be hit on the consumer side, and that would have an immediate impact on prices and immediate decline in retail private consumption. And at a time when the economy is showing signs of a little slowing down with the stock market as is, that would be a terrible combination.
And of course, we also, in terms of the rest of North America, we had the NAFTA, the North American Free Trade Agreement, now is a 2.0 version, really updated and with a lot of shifts as well. How do you see that trade relationship growing?
I like NAFTA 2.0. It's not the name that the White House is using, but that's exactly what it is because it is pretty much NAFTA with needed tweaks there, kind of adapting into the year that we are, really, digital economy and all that. The relationship is sour between all three countries, but definitely between the U.S. and Canada. Now, there are some good things that came out of NAFTA 2.0. One of them is labor regulations. It is now going to be, Mexico is going to provide real union options for their workers, and they have to increase the wages because 40 to 45% of the auto content has to be made by workers paid $16 an hour. That's a lot of money in Mexico. So that's going to change their supply chain. The whole idea for the United States is to bring more production to the U.S. And with that, really more and more will move from Mexico to the U.S. in terms of companies. But at the same time, I find it interesting that these are exactly the points that were covered in Trans-Pacific Partnership Agreement, which this administration vehemently rejected and President Trump walked out on. So that I find that interesting. But at least the tension between the three countries kind of lessened, even though I will still watch relations between the U.S. and Canada with care because not everything is good there.
And another region that also drew the ire of President Trump was the European Union. Tell us what's happening there.
Well, not much really. Because there's so many things happening at the same time. Now they're watching for the Brexit because how that's going to unfold is going to have an immediate impact on the relationship between the U.S. and U.K. Free trade agreement. So it's kind of a wait-and-see period. But the tension that we've seen about 6 months ago between Europe and the U.S. is no longer there. However, it's also important to mention that the economy in Europe is slowing down. We're seeing Germany and Italy contracting already. The economy in the U.S. will be slowing down in the first quarter of 2019. So these realities will bring the two sides together faster than one would have anticipated were it not so. And I think they're going to come together to an understanding very soon, I would say in the first half of next year.
So then given the shifting sands that we've seen in the U.S.'s different trade relationships with different countries and regions in the world, how would you describe your overall outlook for 2019?
Cautious optimism. I hate that word. I hate that phrase, but I have to say it because I do know now that this administration, barring some individuals in there, do understand the risks that are out there for the U.S. economy because we're seeing it every single day now with the stock market performance, which is very, very important to this president, with the numbers, inflation, unemployment, real GDP numbers kind of going not the right way that we've been expecting or we have witnessed last year. And that is going to have the biggest impact on trade policy. I think the bargaining power, if you will, was on the U.S. side when this issue started, and we've seen the Chinese economy slowing down. Now I think that has shifted to China. China is looking at the stock market here and the economic numbers, and they're saying maybe we can wait a little longer.